Now, the last part of the question requires us to prepare a balance sheet. So we will start with the title. It's Buffer Limited, yeah? Buffer Limited. Statement of financial position. As at 30th September 2022. So we will start with the non-current assets. On the non-current assets, we will have three things. We will have property, plant, and equipment. We will also have the leased plant, which we will call it right of use asset. And we'll also have the goodwill. So goodwill arises if a business acquires another business, or if we purchase another business. So we start with the property, plant, and equipment. So from the property, plant, and equipment, we have a total of 3 assets: land, buildings, and plant. So let's go ahead and do a working for the same. So we have property, plant, and equipment. We have land. The land, we are given land a valuation of 80 million. Given a valuation of 80 million on land. We also have buildings. We also have buildings, and the valuation is 108. So we are given the cost. So we need to get the cost. The cost is 108. We have a cost of 108,000. We less the accumulated depreciation of 27,000 and depreciation for the year of 2160. This will give us a total of, or a net book value of 78,840. Next we have plant. For plant, we have the cost of plant was 162. Let me get 162,000. The accumulated depreciation was 66,540. 66,540. We also have the disposed plant. The disposed plant, we had done some working. The NBV was 9,000, so we just less the NBV of 9,000. Lastly, we have the leased. We have depreciation for the year, which was 31,500. So all this is giving us a total of, let's calculate this. This is giving us a total of 54,960. 54,960. 54,960. So we can go ahead and add the two. 80,000 plus 78,840 plus 54,960. That is giving us a PPE value of 213,800. 100. It's giving us a PPE value of 218,300. So we have 213,800. Now right of use asset. So the right of use asset, we take the value of the least asset, which was 186. Let me confirm that. Let me confirm. It was, yes, it was 186,000 minus the depreciation of the leased plant. Let's see, the depreciation of the leased plant was must have been 37,200. So that 37,200. So 186,000 minus 37,200 is giving us 148,800. Next we have the goodwill. So goodwill will have to do a working. So let's do a working for goodwill. Goodwill on conversion. Goodwill on conversion. Goodwill on conversion. We have the purchase consideration. The purchase consideration, if you read the last additional information, number 8, no entries were made to record the conversion of the partnership into a limited company. The assets were taken over by the company at their book values, except for land, which was valued at 80 million. Fine. The company issued to partners 32 million shares of 10 shillings. So that is the purchase consideration. I'm calling it PC to stand for purchase consideration. So purchase consideration is 32 million shares at 10 shillings each, giving us 320,000 or 320 million. 320 million. Now we less the net assets acquired. Less net assets acquired. We less the net assets acquired. We less the net assets acquired. So the net assets acquired include the capital balances of the partners. The capital balances of the partners. So we just get them from the trial balance as 160 plus 120. 160 plus 120, giving us 280,000. Next we have the current account balances. The current account balances, we get them from the balance sheet as 16 plus 4. This is giving us 20. Next we have the profit for the year. It's part of the net assets. Profit. The profit is given us 40,000. That's okay. Lastly, we have the revaluation of land. The land was revalued. Revaluation form part of the net assets. Revaluation. So we are told that initially it was revalued to 80, but initially it was, let's check from our trial balance. From our additional information, 72. That is giving us 80 minus 72. 80 minus 72. 80 minus 72. That is 8,000. Now we can go ahead and less all these figures and get the goodwill So our goodwill in this case will be given as let's calculate that. 12,000 will be given as 12,000. So we go ahead and indicate that our goodwill is 12,000. Our goodwill is 12,000. And that's it for the current assets. Next we have non-current assets, next we have current assets. Current assets, we have inventory. Get the figure for closing inventory, which was 132,000. Next we have trade receivables. Trade receivables given in the trial balance was 296,000. Next we have cash. The balance for cash was 80,740. Yes, 80,740. That's it. Next we have equity and liabilities. Equity and liabilities, we have ordinary share capital. Ordinary share capital. This is given as 320,000. These are the shares that were issued to the partners. They were 320,000. Next we have retained earnings. Retained earnings. From our income statement, we got the figure as 46,875. 46,875. But we had drawings. We had drawings of 12,000. So we less the 12,000, giving us a figure of 34,875. 34,875. Next we have the non-current liabilities. We have the non-current liabilities. We have the non-current liabilities. So for the non-current liabilities, we have items like loan stock from the balance sheet. No, not the balance sheet, but the trial balance loan stock. The figure for loan stock was 240,000. We also have deferred tax. We had calculated deferred tax, and we saw it was 50,400. We also have lease obligation. lease obligation. Now the lease obligation, I want us to go back to the amortization schedule. Here is our amortization schedule. Now the lease obligation, we have the non-current figure and the current figure. Now the non-current figure will extend for a period of more than 1 year. Now the balance for the next period is 122,641. This will be our non-current liability. So we get the lease obligation here. Lease obligation as our non-current figure will be 122,641. 122,641. I don't think there's anything else. Next we have current liabilities. Current liabilities, we have current tax. Current tax, we saw we had 9,000 and we had an over provision of 1,200. So we have a total of 10,200. We also have payables. Given as 72,000. And lastly, we have lease obligation. For the lease obligation, let's go back to our amortization schedule. So from our amortization schedule, our lease obligation will be the principal for just the principal for the first year, period 1 and period 2. So this is not period 2 and period 2, year 2, period 2 and 3, it's period 2 and 3 in year 2. So this is 16,207, this one, and 17,000. So these two, this will be our current liability. So let's go ahead and indicate that. Our lease obligation in this case will be 16,207 plus just the principal 17,017. So giving us a figure of 33,224. 33,224. And that's it. That's all that was required in this question. And that marks the end of our question on April 2023, question 4. Now in the next lesson, we'll look at more examples on partnership questions.